Morning, everybody. It's Monday, the 1st of February. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Good morning, guys.
Morning.
A few chats offline before we come on this morning with regards to the pretty spectacular move in silver. For those that have seen it, it's up by over 10% this morning. Ian, you're across that. You want to give us a quick roundup as to what's going on there?
Yeah, I mean, I was just sort of looking at the charts. This is a monthly chart, so we've broken past this previous swing high, which was posted in August. I mean, we're still a way off these dizzy heights, which was seen in April 2011, which was up around $50. But it's, I mean, it's called iShares Trust, which I think we talked about it last week. It is a one of these Reddit groups focused now. They basically think that silver's manipulated by the COMEX exchange and other parties. I won't mention the banks involved, and that's why they are focusing on silver. And if you look down on this right-hand corner here, it's up over 10% this morning, and gold is only up 0.8%. Technically, because I did have a quick look at this at the weekend. Obviously, you got this 50% barrier here at 30.79, but it's sort of pushing through a lot of technical levels. This is a short-term time frame. This is a 4-hour chart, so it pushed through the 261.8% this morning. So that basically becomes invalidated, and the next sort of upside barrier is around here, which is 30, 40, 31, 28. But I don't know, the power of this upward move at the moment. There is a gap open on other charts on the retail platforms. I can't see it stopping myself, really.
SLV is the code you're talking about. That's the iShares Trust for silver.
iShares Trust. What is it?
SLV.
SLV.
So obviously there's a number of Reddit-fueled surges that we're seeing in markets. We saw it last week, obviously, with GameStop. We've seen it with the likes of American Airlines, cinema operator AMC. So they're obviously getting a bit of a lifeline off the back of that, and hedge funds are really up against it if they have got any kind of short exposure, because they're being actively targeted. A bit of a retail revolution underway. How long it's got, I don't know. I've seen a few
I don't think it's going to end well, is it?
groups popping up about trying to, organise sort of coordinated moves on various assets. I think there's a scheduled pump on Ripple,
Airlines.
one of the currencies, cryptocurrencies, due for this week. Whether or not they'll take off or not, I don't know. It might just be a case of people trying to jump on the bandwagon and get themselves out of positions they're stuck in, maybe.
But also saying it's quite good for these
on socials.
It's certainly it's quite good for these companies that have been sort of under pressure, because obviously ramping them up means that they can then issue more stock.
Yeah, or the owners can dump all their shares now, and it's an absolute basket case.
No, but that's the whole thing. It'd be better if they issue more stock. I think we talked about this Friday. If they issue more stock, like GME, if they reckon, the management have said their shares are worth $20, so issue more stock at $330. Issue as much as you can. They'll receive the money for that stock that they've issued, and then they'll be able to invest it in bringing GME into the 21st century.
I mean, that was the whole point with GameStop, wasn't it? The fact that there was only a limited amount of shares out there. So basically, when everybody was buying options against it, then to hedge the option, you needed to buy a share. And obviously, the closer it got to the strike, is that right? Strike date, then obviously these people that had written the options had to buy shares, but there's no shares out there.
Yeah,
because it's a limited stock, and that's why you get those, incredible rises to the upside. That's why I'm sort of a little bit surprised about silver this morning. You can understand it in maybe this silver trust, because there's obviously a limited amount of shares in it, but silver, it's an extremely liquid product, isn't it?
Yeah, Well, again, I suppose all these commodities are based around the open interest on the futures market,
Yeah.
or the physical market. So, you know, if people start to buy it, it depends how they buy it. Obviously, if they're buying it through a trust, it's all cash delivered. But then it has a knock-on effect to the futures price, which might be deliverable, and then Lord knows what'll happen. It'll end in a bit of a
Yeah,
mess.
because a lot of people say that there's physical silver. There's a hell of a lot less physical silver than there is traded silver, isn't there?
Yeah, I mean,
So,
if we think about silver as a price compared to gold, because it's always one that's been discussed over the years. I know a lot of people. I've spoken to a lot of people over the last few years who have had everything, invested everything in silver because it was so underpriced. So this is, you know, their sort of like moment to really sort of like to enjoy. And the gold silver price was, I think last year got to a ratio of 120. Gold was silver was 120 times less valuable than
Cheaper.
gold.
Yeah.
Yeah, and over historically, that number has normally been between 40 and 60 times. So, you know, there was a big disparity. Actually, the move to this morning brings it to 60 times, which is a long-term, since the world began, a long-term average.
So a
So,
mean reversion is what we've seen there.
yeah, so it's not really a really unsurprising thing if you look at it over the millenniums. So unfortunately, my chart doesn't go back that far. So
You were writing them down on paper then, weren't you, Steve?
yeah, I was, yeah, back in the good old days. Yeah, so to go even further, I mean, we'll sort of take the price of gold at 1860 at the moment, and 50 divided by 50, that takes it down to 37 times. So the gold is 37 times more expensive than silver. So that would be the sort of range. So 50 is definitely achievable. It's just sort of this is I don't know. This is getting the.
you would have thought some institutions would be buying gold more aggressively this morning, though, as a hedge, wouldn't you?
Yeah, but that's a sort of like, again, that sort of thing doesn't work in times like this. This is a sort of anomaly where people are targeting a short position, and so even if you were to hedge in gold, you sort of like, I think you're left with a hedge that isn't really a hedge. It's more of a sort of shrubbery.
Okay, so I think we're going to get more of this kind of thing throughout the next couple of weeks. There's going to be more coordinated attacks, and I think we've just got to try and keep our eyes open for where the next opportunities are emerging from. So get yourself a Reddit account if you haven't already got one. Aside from that, obviously we've had a bit of vaccine news, which, you know, is not really been of much interest because people are focusing on this, but it looks like we're trying to get some situation sorted out with Europe.
Yeah, they're backtracking a bit, aren't they? Something to do with the Irish border.
Yeah, so it was a 1-0 Brexit, was it, over the weekend? Was that?
I think so.
That's what one of the newspapers said, I think. Aside from that, there was some chat with regards to President Joe Biden's alternative proposal on the COVID-19 economic stimulus. There was chat that it could be significantly smaller than what Biden originally called for. So I don't know if that will have any impact on risk assets today. It certainly doesn't look like it at the moment. But we'll come on to some charts shortly. I think that was pretty much it from the news. That was sort of the main stories. Obviously, everything is just focused on the chasing down these shorts.
Yeah. Right.
Okay. Who wants to have a look at some charts here?
I'll have a look at some charts.
Go on in.
When you said coordinated attacks, it sort of sounds a little bit more sinister, doesn't it?
It does, yeah.
The poor old guys on the Reddit, on the Wall Street bets, you know, are just doing something which they're allowed to do until it's been banned by someone. We'll see. So look at the indices really, and sort of the difference in the indices this morning. I'll just focus on that to run through. From a daily perspective, we saw this upward trending support line. Because it's in red, of the word resistance has come into my head. Let me change it to blue. That was broken, and that's we had a negative move and a lower close, so the lowest price we've closed since just before Christmas in the FTSE. But we've had a really nice rally back this morning. Wouldn't be surprised really if this move back is somehow linked to the silver price. Same on the DAX, had a really nice rally back. We had this bearish engulfing on Friday, and then looks like it's looking to try and form a bullish outside day, which will be very positive for stocks. And we'll have to wait and see on that. On the Dow, we're posting at a bullish hammer at the moment on the daily chart. We've got this big support below that we talked about last week from the Ichimoku cloud, which takes into account all this price action way back here. Acting as support, and it's reacted really nicely this morning, so quite positive start to the European and the US indices. But the most interesting indices are more the commodity based, and the one that relies on silver more. And we'll look at both the China 50 and the Hang Seng. And if we can sort of like drive down to what I was looking at just before we came on air, more of the price action maybe in the Nikkei, which is sort of like taken out the Friday's highs already, and that looks to be sort of like good potential for a move higher. So all this silver shenanigans has filtered through, and maybe started a little bit of a recovery in the indices. Just quickly jump on the chart, see if we can get any technical levels in gold and silver. As we know, gold has been pretty much sideways for a long while now, since the start of the year really. We had the big sell-off from 1960 all the way down. The swing low touched 1800, and we've bounced since then, and we've got this sort of almost a inverse head and shoulders formation, but just sideways price action really. We failed to break above 1875, and real support comes in at 1830 in gold, trading at 1860, so a little bit towards the higher end. But obviously we can see the silver price action, and if we go back to August last year, we formed a top at 29.90, 29.89, I think it comes in 29.90, which we've touched this morning. So double bottom obviously was formed way back in just before Christmas, and price action has held on and been supported by the cloud very nicely indeed. Thank you very much. A little bit of inverse head and shoulders formation, which was triggered by a break of 25.91. Maybe I'll bring a 4-hour chart just to highlight that a little bit more. Let me get rid of these lines on here, which I've drawn for. Oh, yeah, let's get rid of the cloud as well. So inverse head and shoulders is a bullish formation, and I'll show what we mean. We have a move down, left shoulder, neckline, head, right shoulder. So a break of there, and we've already exceeded where prices should go. So prices were basically targeting just a move to just under $28, and they've exceeded that. So that's a really nice example of how head and shoulder formations work, and how explosive they can be. Yeah, wasn't expecting anything like that this morning. But if we look at put it into a bit more perspective, let's get a weekly chart on here. And we can see the move that will be targeted. I'll have to redraw that. $50, a price not seen since April 2011, like Ian said. We're at 50% of the whole down move. So another reason why this acts as a bit of a resistance.
Symmetrical pattern goes all the way up to 88.6 from there. I don't know what that level is.
$45. Not far away from what we're talking about, the $50 level, and yeah, a break above $50, and I mean, look, prices go back all the way down to here. But yeah, so this is again, if dollar remains under pressure, this will help, but it's all the story about squeezing the shorts, this move, but it's just bringing it back to a natural mean reversion.
Yeah.
Lovely. You done, Steve?
Mm-hmm.
Thank you. Ian, over to you with the FX.
We'll get some really weird moves then in FX, because obviously stock indices move to the upside, then the dollar index should move lower. And this is the hourly chart here. You can see this really sort of impulsive move that we've already seen this morning. I did spend a bit of time at the weekends looking at different things, obviously. This is a large channel formation. If it breaks the channel to the upside, then I think the dollar is going to rally and rally quite aggressively. Let's get rid of that little line there. That doesn't mean anything. But I don't really have anything in the way of support until down here, which is the base of this channel formation. It's a 261.8% fib of that move, and it's also a 78.6% fib of the last rally up. So nice confluence area, nice channel base, nice. It was a TDST support line. So I was really hoping that we were going to see some downward pressure this morning, and that would give an opportunity to get long of the dollar. It's not broken the high yet, so there is still that opportunity, but with it being extremely close to 90.87, which is a previous swing high, I don't know whether or not it's going to hold on. And that reflected back onto euro dollar, and I'm just going to show, because there's quite a few patterns here. So basically dip buying here, there was a support again at 120.95, and we just dipped below there for a rally up towards 122.12. This is all dependent on the dollar. I don't think it's got anything to do with euro at all. And that was quite an interesting level, 122.07, 122.16, because if you go back to this chart, 122.07, 122.16 is this previous swing low. So I thought that's quite a nice target level to then use that symmetrical pattern to get short. But I haven't actually got anything in the way of resistance until here, which is 122.70. And if we go to this time frame, that makes a different cipher pattern. So you've got a 1 hour time frame that can basically take us up to around about here, 122.17, and then you've got a 4 hour time frame that says that we could get up to here. So I don't really want to be buying this dip. I want to be selling this rally. It's the same thing with the dollar index. I don't want to be selling down into support. I want to be buying the support level, and I want to be selling this resistance level. So I don't really want to take this trade just in case it breaks to the downside and then it looks like a very large head and shoulders, which is very bearish. So it's all a bit mixed again this morning. We've got loads of wedges on cable, but it still keeps on driving higher. So this is a 8 hour wedge. We've got support here at 136.45. That needs to break to take us down here. And then if you look to the 4 hour chart, we've got another wedge formation. The support is just above at 136.57. So again, looking quite bearish and getting these outside candles, but whether or not we're going to push through and follow through, breaking these lows, I don't really know at the moment. Dollar Swiss is clearly broken now to the upside, and you can see I highlighted this. So what I was looking for when did some weekend analysis was basically a move lower, being driven by the dollar to try and get long, but like I said, it's obviously broken to the upside, so this flag is now playing out. If you get a retest of the breakout level, it's at 89.21. That's now quite a good opportunity to get long. Dollar yen, I like this on a bigger time frame. So if we go to this time frame here, I'll just pull it in a little bit. It's not the best third wave I've ever seen. So 1, 2, 3, but this is extremely choppy. So that would dictate that this is a fourth wave correction. So got some resistance here at 105.30. And if you go to this time frame, you got a flag target at 105.15. So I think, and a 161.8% extension of that move there. So I think anywhere around here, if we get a reversal pattern, and again, you've got to keep an eye on stocks really. And I think that's worth a shorting opportunity. This is a retest of the wedge formation. Again, I've got support down here, so I was looking at a different time frame, hoping that this was going to play out, which is a reverse head and shoulders pattern. So left shoulder head, 61.8% plus a support level at 127 the figure. So this was looking prime. Again, it's got to break to the upside, so it's all about the dollar really this morning and what it's going to do, whether or not it's going to hold on to that channel formation. And I couldn't really get a handle on the big picture is bearish. That's what I should say initially. So if you go to weekly charts, it's a completion of a 5-wave count. So it's just trying to get the best entry opportunity in short-term timeframes. And this worried me because I thought, well, that looks like a bit of an expanding wedge formation. And if that is the case, then we can get back up to this level here, which is the start of the wedge, which is 178.20. But I do have some resistance here at 177.70. But again, it's all about the dollar. And if we break out of this formation to the downside this morning, then this is just a choppy some sort of first wave, and then we get into the next wave lower. What should be noted though, I suppose, is that every wave inside here is still in 3 waves, and you really need a 5-wave count to get a proper reversal in an impulsive move. Again, I thought that we were just going to hold on to this on euro sterling. It's 161.8% fib. We've seen a bit of choppy price action. I thought it looked like a bit of a wedge formation, but again, we've just broken to new lows. So I think that could potentially push aggressively lower, but I'd keep an eye on the wedge breakout in sterling and the base of euro dollar to really get a bias using correlation on this pair at the moment. I wouldn't probably just trade it on its own, if you know what I mean. And euro sterling, euro yen, I can't really see anything up until about this level, 128.12. I've got some support here. There's a little very small band. It's 147. 126.47, and I'm not sure what that is. 126.43 is a support level. It gets extremely close to this previous swing high. So if you're thinking about Elliott wave, it's virtually taking out that, which would invalidate an Elliott wave count. But I think buying into dips for euro yen is still valid at the moment, as long as that dollar yen doesn't hit that that flag formation target.
Okay, cool. Thanks, Ian. Okay, so going to the head stuff from Friday. Stevie boy, 4R on gold.
Get in.
Hit target.
There you go.
1873, £81 on our accounts. I was stopped out on FTSE, and Ian, you got off to a good start on Bitcoin, but it fizzled out.
Yeah, I was waiting for Reddit. I kept on posting things on Reddit, but it just
not. They weren't taking any notice of you, were they?
Didn't happen. Very disappointing.
Overall, we are still in this sort of mini recovery from this horrible drawdown that we had at the back end of last year. So hopefully we can keep that going. Steve, a nice little resurgence from you. Ian and I just flatlining, but hopefully we can put that right today. Either of you got a decent idea or something you really like today that you want to get behind? I take it you're posting it on Reddit as well at the same time.
Yeah, of course.
Yeah.
Who's going first? The euro is massively undervalued. And then, anyway, no, I don't want to go first.
Pump of the euro.
I don't want to go first.
Steve?
Well, I'll go first.
I don't mind going.
Go on then, Joe, if you're ready.
I'm looking at Aussie CAD today. So a bit of a correction lower. What I've got here on the hourly chart is a break lower below this sort of range that had formed. In the last few hours or so, we've seen a retest of that following a gap lower. So I fancy us back down to those lows that we posted overnight, really. So I'm going to take a short here at 97.65, targeting a move down to 97.40. I would like my stop ideally above that high there at 97.80, but because of the R, I'm going to have to go a bit tighter. So I'm going to go at 97.77. So looking for 2.5 R on that one today.
Cool. You could have
Pretty
taken your time
boring.
a bit.
Pretty boring, really, considering what else is going on in the markets. But I think I just like boring markets, to be honest. I much prefer them to be all over the place like they are now.
Be predictable.
Yeah, it does suit your personality, Joe. So, is Ian ready or not?
I've chucked you under the bus now, Steve. You've got the chance on the screen.
Oh, right, it's you. Happy days.
Okay. Where will the mouse stop? DAX,
Very technical.
because I quite like DAX as a market to trade, not necessarily like it as a
close to a 13, higher. Steve.
It is. It's close to 13.613. So
that's good.
Close enough to buy. I mean, we've had this previous price action. We're above the previous price action, and I'm going to just take a really ultra short term. Almost, you could call me a little bit of a HFT bot this morning. Let's buy it at 13,600. I think this silver news hasn't sort of like finished, and we're probably going to get a little bit of an upswing in indices today. Let's really, the stop should be 100 points away, but we're going to be ultra aggressive with this, and we're going to go for a 40 tick stop, 13,560. So it might be stopped out by the time the program finishes, and we'll just target a move up to 13,760, another 4-to-1 risk reward. So buying at 13,600, stop at 13,560, which is very tight, not recommended, and the target is 13,760.
Boom. Let's see how it goes. Ian, that give you enough time?
Yeah, I've.
Fucking hell, things must be desperate. Euro Swiss.
It's not my prime entry. Prime entry is 108.34, but I can't find anything that's close. So I'm gonna have to take this. Whee! I'll put it above the 224. There you go. So getting short at 108.22. Caveat is that the prime short entry is 108.34. Targeting 107.60. We'll stop at 108.40. Will give me 3.4 R today.
Boom. Good luck.
I don't know if the guys from Wall Street Bets are watching, because I'm already half an hour on side.
Oh, maybe they are.
Half an hour.
Okay, so news-wise today, we've got Eurozone unemployment at 10 o'clock, rate rise expected to 8.5%, and then at 3 p.m. we've got US ISM PMI manufacturing expected to fall to 58. Anything else on the news today that's worthwhile?
Biden's out at 10 o'clock tonight.
Okay.
Me tucks up in me pit by then.
That's about it then, is it?
Yeah,
yeah, that's it. I think we've
overnight. RBA rate decision overnight.
Okay, so a couple of bits to wake up to tomorrow then, and straight into some housing price data in the UK tomorrow morning as well. Is that?
Yeah.
7 a.m. Okay, lovely. All right, gents. Well,
Joe wants to go that. Joe wants that to go down. Steve and I want it to go up.
Oh, I'm not bothered. I'm staying put.
Oh yeah.
Yeah.
I just want the DAX to go up. I don't care.
All right.
Have a good one, guys.
Yeah, have a good day. Take care.
Cheers.
Bye.